Alright, so welcome back to the Stocks and Shares series for beginners. Right now we're going to be looking at the information that you get given when you Google a share and what that information actually means. So right now I've Googled Murphy's Oil and it brings me over to this chart. And this chart basically has a load of information on it, very useful information. And we're going to be breaking down what this chart actually means and how we can use this information to make informed decisions about whether we should buy or sell a share. Now, straight up, Murphy's Oil Corporation is on the American Exchange, NYSE, and it's basically it produces oil, as you can probably tell by the name. And right here at the very top, we got the share price, $12.62 US, and the thing next to it displays how it's moved during the day. Now, we can see the dotted line represents what the previous close was, 13.10, and this and this 13.10 relative to the price today was a decrease of 3.66%. Now in the pre-market, which is the pre-market before the market opens, it's actually gone up 0.48%, as you can see by this grey line. Now we're not going to get too much into the pre-market today, but we are going to talk about everything else. So we can see we've got the date, we've got the time zone, we've got the pre-market, and then we've got these different time periods we can check the share over. Obviously, it was trading around 27, 28, and then coronavirus came. With the lack of business, it's fell dramatically. We can even have a look at the max. Oh, by the way, YTD means year to day. And then we can even look at the whole sort of lifetime of the share. So it's 1983 this has been trading since, so very close to the stock market opening. And you can see it's had quite the ride, up and down, up and down, up and down. And right at one point it was trading at $80. Right now today it's only $12. Now let's move down to the ratios and the numbers and figures at the bottom of the screen here. So we can see the open. Now recently and previously it opened at 13.04. We can see the daily high of 13.12, and we can see that the low was 12.53, which is close to what it closed at, really. We've also got the market cap here. Now, basically, the market cap, it refers to the market capitalization, which is the total dollar value of a company's outstanding stock. So if it had 10 shares outstanding at $10 each, the market cap would be 10 times 10, which is $100. Now, the whole idea behind a market cap, it allows you to quickly gauge the company's value, or expected value, interpreted value, and it is quite a useful figure. Below that we have the price to earnings ratio. Now the price to earnings ratio for this company is 3.03, and this ratio is used for valuing a company, and it measures its current share price relative to its earnings per share. Now a high price to earnings ratio could mean that the stock price is relatively high to earnings and is potentially overvalued, whereas a low price to earnings ratio might indicate that the current stock price is low relative to earnings. Because if the price was 10 and they was only having $1 of earnings, you're looking at a price to earnings ratio of 10, and that's not really good. Whereas if the company had earnings of $1 million and a price of 100,000, the price to earnings ratio would be 1/10. And that is pretty good. So a general rule of thumb, the likelihood is a lower price to earnings ratio is going to be a bit more attractive to investors. Next up, we have the dividend yield. Now the dividend yield here is 3.96%. And the dividend yield is basically the amount of money a company pays shareholders over the course of a year for owning the stock, divided by its current stock price, hence why it's a percentage. Now, for example, here, if a stock price was $100 and I held one stock and the dividend yield was 3.96%, given that the stock price is $100, I'd receive £3.96 in dividends, and hence the dividend yield is 3.96. Now here, obviously, it's a dividend yield of 3.96 on a 12.62 valued company. So you could do the maths and work out what that dividend is per share. Next up, we have, and also an interesting thing to note is that on ex-dividends day, the stock price, as a general rule of thumb, would fall in proportion to the value of the dividend paid out. So if so on ex-dividend day, if the dividend yield was 2%, you would expect by theory, the stock price, once that dividend is paid out on ex-dividend day, to fall by 2% in value. Now, this doesn't always happen, but that is the general rule of thumb and the general theory behind it. And then below that, we have the previous close. The previous close is what it previously closed at. And then we have the 52-week high along with the 52-week low. Now, this basically implies the lowest price over the last year was 4.5, which is more than likely going to be in this coronavirus period. Yeah, around there. Damn. And the highest price in this 52-week period was 28.12, and that was in 2020 as well. So yeah, that is a rough breakdown of the table you'll find as soon as you Google a company or a ticker or a stock. So I hope you enjoyed, and let's jump on to the next episode where we're going to be looking at the quarterly financials of a company.